Ira Epstein with your Morning Flash update for this Thursday, and we're sitting here now at the 28th of July, 2022, and what a stellar month for the stock indices, up again. Now, as I said yesterday, I was taken back by the dovishness of Fed Chair Powell. I saw him as dovish. I was watching today on CNBC. Steve Leisman didn't think so. Rick Santelli most certainly did. In fact, Rick was very vocal about it all, and I do know Rick, known him for decades. And he was very vocal about it, that he thought too that the Fed chair, he didn't know what he was talking about in terms of what's he seeing, because what we had today was another set of economic data, and the GDP number that the Fed chair blew off. He said, you know, you get the first read, it's highly revised, I don't know that it means anything. Well, it did come in down 0.9%. The trade was looking for up 0.3, so that's over a point swing. It might be revised, but to get it positive, I doubt it. So then the question becomes for the academics, 2 quarters of no growth. In other words, shrinkage in the economy. Is that a recession? The argument that they'll say is no, because you don't have a big jump in unemployment. From an academic point of view, right. But what they didn't go into is what's the definition of stagflation. It's a slowing economy. We have that. And it's high inflation. We have that. So at the very least, in terms, I don't know what it means other than academic terms, you are in a classic stagflation scenario, and it's a difficult one to come out of. So you are looking here at how the metal markets are responding to all this. They are exploding to the upside. The stock market's looking at that, and it's also looking at the dollar index, which the market is saying to itself there, and it's looking at the bonds and notes and saying, you know, the economy is down so much that the Fed can't really keep raising interest rates as much as they might want to. I think that is the scenario that we're getting to, that the economy is slowing down so much that the Fed's fight against inflation, they almost have to hope that natural forces will take down the inflation, because if they keep raising rates in a slowing economy, it is most definitely the recipe for a very severe recession. It's something they want to avoid. So what does that do? I think what I just gave you is the key. I think they're saying to themselves, traders, you know, the Fed's in a rock and a hard place. Why not put in some risk assets? And that's what's going on across the board. In the grain market this morning, what are you getting through that? Weather. You have the bad weather. Are you watching what's going on in the South in the storms, be it St. Louis, Kentucky, floods hitting everywhere? Now, hot weather's right behind that. Drought area is still going. I've been pointing out and doing my darn best to tell traders, I think you just saw your reaction lows, and now you're going to go into the weather scare. Keep your eye on the energies. Switch over to the October crude. The last trading day for September, I know it sounds crazy because we're in July, is tomorrow. So make your switch over in that right now. Cotton, I think cotton's made an important low as well. I was mentioning that to the traders. So now that all this is out of the way, it's time to get excited about the markets. So let's take a look, if we could, for a moment here. And I want to come back to a different area for you. Right here, the news. Here's the GDP news. Headline, down 0.9, market expected up 0.3. Chain-weighted index, up. When you come to the PCE index, right about what expected. The core PCE, not quite as bad, and that the Fed pays strong attention to that as to what the final first quarter was, but again, it's the first read. Advanced personal consumption, not as strong as it had been. That's another thing. And final sales, they reversed course versus the big drop that we saw in the first quarter. Jobless claims down 5,000 to 256, but that's after a revision of last week. We get the energy analyst forecasting the EIA natural gas storage coming in with a low number of 22 billion feet. The KC Fed will release their January manufacturing composite business index at 10 this morning. We have a bunch of speak today. We have Treasury Secretary Yellen speaking today at, I think, 12:15 or so Central Time. And at 1:15, President Biden's due to come on the air and talk about things that he sees in the marketplace now. This is all going to get very exciting. The president's got this on his head. He'll come out and saying that that they've made certain good strides with Senator Manchin getting some of his tax reform package through. Folks, he got nothing through. They're going to do certain things for wind, solar. What Manchin said was, hey, if you want to tax the billionaires, go at it. But you've got to get this all through Congress, and the problem is you're going on summer recess. At the end of summer recess, a lot of votes have to happen. Midterms are coming. Just what does get done? I have my doubts that you get an awful lot on that. Now, I want to remind you, we offer some free trading courses. One of the ones that we offer here, and I'll bring it up for you right now, is my pivot point course. So let's talk about this. One of the things traders like to look at, and this was taught to me by famous traders 30 years ago. I'm not going to mention the gentleman's name, but it's how I turned $1,000 into $1 million. And by the way, in my firm, this gentleman traded through it in the 1970s and 80s, I believe. And I watched in amazement. Problem is he got too big for the markets. Yes, too big. It was not electronic markets, nowhere near the depth, but the concept's phenomenal. He's still a mainstay name, but barred by the NFA, so I can't talk about him. So when I look at it, he looks at the previous day's range, created a formula, and you probably have this in your charting software package. It's called a pivot point, and the key is you have to learn how to use it. Now, I tie it together and teach you in a video series that is for free. Teach you how to plot it on your charts, how to use it, and how to tie momentum into it, which most people don't even understand, but that's one of the secrets to it. So how do you go about doing this? It's simple. You go to our website. It's under free offers. You can also call us, but it's www.iraepstein.com. I think you see it right here. You can call us, or take your cursor, point it right up to the front, right here where you see me doing this, and a cursor, you'll see an icon appear, click on it, free offers. I'm Ira Epstein. You have a great day. I'll see you at the end of the day with our market wrap.